All right, what's up, guys? Anthony here, Special Analysis. Hope you're having a wonderful day. In this video, we're going to take a look at Hawkeye tools here. We're going to take a look at the SPY. This is the ETF that tracks the S&P 500, essentially the benchmark to the broader markets, if you would. And what I kind of want to focus on is looking at a bigger picture chart. When I say bigger picture chart, we're looking at a monthly chart. Okay. The benefit to Hawkeye tools is you can really define any time frame that you so desire. And in this instance, what we're looking at here is the bigger picture. Okay. This may not necessarily be for the day trader, although you can use these tools for day trading. But this is for somebody who's looking to stay in the market for the bigger picture, right? Somebody who's looking to aggressively buy options with a very far out expiration, looking to either take a super leverage position or somebody who's looking to manage their portfolio on a bigger picture basis. Like, hey, I want to get into positions that I'm looking to hold for 5 to 10, 20 years. Like we're looking at big picture stuff right now. And the flexibility is endless. Like you can go from this extent all the way down to a tick chart that you're scalping the market, within seconds. But for this example, I want to look at the bigger picture because I essentially want to talk about how Hawkeye never told you to exit the SPY or the broader market for that perspective since the recovery of the 08-09 recession. Call it what you want, okay? So monthly chart, SPY, you can see here we were, chumming higher, nice and easy from the late 2000s after that last little, breakdown. Market grinds back higher. Here comes the recession, right? This is the housing market bubble. This is where things pop. This is where things get kind of shitty and dicey. And, we got defaulting mortgages and Lehman Brothers goes out of business and things that nobody ever thought they would see in their lifetime transpired here. And then guess what? Right here, I'm going to tell you right when and where, March of 2010, Hawkeye signals to enter the market long. We impulse, we correct. We impulse, we correct. We impulse, we correct. COVID, okay? COVID transpires. Look at this massive whipsaw. But never does it tell you to exit the market or enter the market short. In fact, right here, it reaffirms August of 2020 that the market's going higher. And it does. I mean, it takes this absolute rip into like 480 here on the SPY. So let's just say you bought it off the back of the Great Recession, somewhere around 114 bucks, 115 bucks. We'll just use round numbers. And you held on to it through this recent high. You're looking at a 320% return on the standard ETF that tracks the S&P 500. This is not a leveraged position. This is just the standard ETF. Okay? Not manipulated, nothing. This is the benchmark of the broader markets. 320%. Where do things get dicey? Right here. See where this trend dot turns red? For the very first time, we start to see the market get a little dicey. Now, what's transpired here? This is a monthly chart. I'm going to dial this in, and we're going to kind of just keep walking our way through this. You can see that we really run a top here. We start to break down. We set some lower highs. We essentially correct through those lower highs. At this point here, we're just breaking. I mean, when I say literally, like the close of this week has just broken these descending highs here. Now, does this mean we go higher? It's possible. Technically speaking, our objective would be to first close above this high, which comes in at 460 for, just round numbers. So closing above 460 would then potentially put us on pace to retesting the absolute high here, which comes in at just a hair under 480. Now, if we get above 480, then we're looking at a pull higher. But notice how this steep correction, we pulled back, and now it really comes down to, are we going to push higher? Now, I'm going to sit tight and wait until I go back to my higher time frame here and see if things really ultimately come to commitment. So that trend is just starting to develop there. You can see that the heat map down here on the bottom just starting to turn bright green. So we'll wait for that trend dot to come in place. As long as we don't double top here, then that allows for this to continue its push higher. But you can see right here on this week, this is the week of June 1st, this past 2022. So over a year ago, year and a half ago at this point, this is where things started to change. I shouldn't say week, the month of June 2022. This is where things the dynamics start to change. Now, perhaps we've created a little bit of a cup. Perhaps we've created a little bit of a handle here. Perhaps we're breaking that handle, and this is where we start going higher. And looking at the monthly time frame, here's your cup, here's your handle, here's the break of your handle based on November's close. And if this pattern holds, then we should surge through the top of the cup, again, which is at about 480, and potentially go higher. But the point of this video was to show you, looking at the macro view of the SPY, which is in fact the benchmark that the market is gauged upon, got you long March of 2010, and ultimately didn't break short until June of 2022. Guys, that again, 300+% move on a non-leveraged ETF that tracks the S&P 500. So I want to take a minute. I want to share this with you. Again, Hawkeye can be used from the hedge fund manager that's looking to hold positions for 10 or 12 years, all the way down to the trader that wants to scalp the market on a very aggressive tick chart. It's applicable to stocks, futures, Forex, cryptocurrencies. It can be used on TradeStation, TradingView, NinjaTrader. It can be used on MetaTrader as well. So I'm going to put some links below this video. I encourage you to do your due diligence. If you have questions, feel free to reach out to me. I've been using this software for a long time. It's been the basis of me creating my own software. It's been the basis of me laying the foundation, of kind of the career that I've set forth for myself. Not only trading for myself, but helping other people trade as well. So again, I encourage you to check out the links, watch the videos, send me an email. We'll have a conversation. If this may be a right fit for you, we can get you up and running. So hope you have a wonderful day. I look forward to speaking to you soon. But guys, this is the versatility that this technology brings to the table, that you can literally scalp the market from second to second, or you can take a position based on this technology that would have held you in the SPY for 320% return over a period of about 11 or 12 years. So that's the versatility. Again, I encourage you, check out the information, send me an email. We'll have a conversation. If I can be of service to you, if this technology can be of service to you, we can get it in your hands as quickly and efficiently as you're ready to step forward. So God bless, and I will see you in the next video.